Good morning, everybody. Welcome to another Daily Market Report brought to you by Mike Bjork. Today's Thursday, March 19th, actually. Excuse me. Hey, we got a couple economic news releases to go over today, but stay tuned at the end there. A little tip regards to pre-approvals, new thing that's coming down the pike, so stay tuned for that. But we'll start with the economic news releases scheduled for today. We had the weekly jobless claims. We had 290,000 people apply for unemployment last week. Forecast remained about the same type of forecast, and it came in at 291. So it came in basically right in lines there, obviously, and not too much difference from our forecast. So decent number there. It was under 300,000 for about a month there. We were experiencing over 300,000 people applying for unemployment. So we'll be happy when less than 300,000 people apply. We got the Philly Fed. This is the manufacturing in the Philadelphia region. As we can see, it pulled back a bit. It was at 5.2 back in February. The forecast for March was supposed to increase up to 8, and it dropped down to 5.2. So obviously not very good readings. As we saw earlier on a previous reporting in New York, it was actually down too. A lot of that is being attributed towards the weather as well as some of the big storms that they experienced back in February. We got the leading indicators for the month of February. So back in January, it was a 0.2% increase, and February came in 0.2% as well year over year. So the good thing about this is it kind of shows us that the economy is kind of be moving more of a moderate pace. So this is kind of a good indicator that showing us that where the economy is moving, not obviously too fast as it's just 0.2%, but it's kind of give us like so far it's going to be at a modest pace. Stock market's a little mixed today. The Dow is down about 100 points. After yesterday, we had the market was down, and then when the FOMC made their announcement, it rallied back, closed up above 200. So again, like I indicated yesterday, get ready for a big splash as to depending on what they say, how the markets react. Today will be more of a correction of the overreaction from yesterday. So today they're kind of getting settled in as to what was done. So what was said on the FOMC statement, basically she did take out the word patience from that. Indications are that they'll be more likely raising rates closer to September than maybe June, and that was why the market kind of reacted the way they did yesterday, which is obviously good for those who are on the stock market. She did kind of indicate that they didn't put any specific number based on the data that they're looking at, but they are looking at the comfort level with the jobs numbers as well as inflation. So inflation, they like to see obviously more wage-based inflation, seeing that people are making a little bit more money. I don't know if you've heard my previous reportings before, but according to a recent study, there is wage earners, 60% of wage earners today are making less than they were back in 2007, which is obviously not very good news for a lot of people. But in any case, those are the things that they're going to be kind of watching. So they are expecting to raise rates this year. Matter of fact, according to their dot plot system that they had in place, most Fed members think it will be more of a modest pace than what they initially thought a few months ago, because the economy kind of changed a little bit. We did have a few hiccups where things aren't going as rapid as they were anticipating, but it's still kind of modest pace. But they were expecting about 0.625 or 0.58% rate increase this year by end of this year, and then raise that another 0.5% by end of next year, and then another about either 0.75 in 2017 or 0.625 is their forecast so far. So this is kind of the thought plan. So you may want to plan accordingly if you're looking at mortgages and such, where rates will be going. All right, so let's go and take a look at the bond market. And we had a nice little rally yesterday too, as you can see, a big peak there. That's the highest peak we've had probably in just over a month now, so that's good news. This here is a month period, and just before February 13th, it was about the last time we saw this height of a market. We're not at the peak where we were back in January, but we made up quite a bit of ground from where we were to that. So we did have a nice little breakout. We'll see if we remain in this breakout, if we continue the trend going upwards. It's very possible we could continue this trend upwards. For today, we're pricing's down about 2 basis points where we left off yesterday after pricing for the better at the FOMC meeting. So this big spike was actually done after the FOMC announcement yesterday. All right, so good news for everybody. We had the better rates today. All right, now to get to the point of the pre-approvals, I don't know if you guys have seen the National Real Estate Post by Frank and Brian back on Monday. I'll put their link down below for that show, but they had made made aware everyone aware that the CFPB is going to relax on regulations for the loan officer to basically not need any documentation to complete their pre-approval process. As we all know in the business, it's you want to make sure for safety for all parties involved that a person is actually qualified to purchase that type of property. So going forward, my recommendation would be is any offer you receive, make sure that that borrower had full credit approval and had that, make sure that they have that submitted with their pre-approval letter. As if you don't know that loan officer, you don't know if they did their due diligence, actually if you reviewed the paperwork or not, and that that client is actually qualified to purchase that property. That will save your sellers a lot of headaches, save yourselves a lot of headaches, including the loan officer as well as the buyer, because the buyer may not be aware of these scenarios. They may just think that the loan officer approved them and therefore they're good to go. As we know the case, that's not always the situation. So going forward, I would highly recommend, make sure that you have your loan officer do a full credit approval through underwriting and make sure that is submitted with all offers. All right. Hopefully, you guys got any questions, feel free to contact me through my profile. I'll be more than happy to help you guys out. We've been doing this for quite some time, and we've been seeing a lot of success with that. You guys have a wonderful day. Sorry for the long recording today. Hope you guys have a wonderful day. Thanks so much for watching, and we'll see you guys tomorrow.